In market news now, overnight major U.S. stock indices closed with modest gains after a choppy trading session, with investors holding their cards close to their chest ahead of a presidential debate and an inflation report that's closely been watched by the Federal Reserve for policymakers. China stocks closed down as the country's industrial profits rose at a much slower pace in May, while investors awaited manufacturing activity that's due on Sunday. Locally, the rand fell nearly 1% to 18 rand 37 to the dollar after trading as low as 18.35, at some point 18.41. It was also on track for the lowest close since June 14th and the worst performing amongst developing nation peers this week. The sovereign benchmark bond yield jumping up 12 basis points, the most in 3 weeks, and stocks dropping for a third day. The all-share index headed for the longest losing streak since June 11th, led by the banking stocks. Industrials are down 0.4%, financials down 1.2%, and resources in positive territory, up 0.4%. To help us make sense of what's happening in terms of the markets, we are joined by Mohammed Wagley, who's a portfolio manager at Sasfin Wealth. Mohammed, thank you so much for your time. Given everything you've seen in terms of how the rand has been moving, at least over the past 4 days, how stocks have been moving locally, how are you digesting all of those market moves as we wait for this GNU cabinet?
Yeah, so the cabinet really is going to be the big driver, I think, of market performance, at least going forward when it does come out. What we've been seeing sort of with reference to this week is quite a bit of choppiness, at least from a local perspective. Not too much different from a global perspective, but I do expect we'll see some movement when we get some clarity just surrounding the cabinet and, how the country is going to be operating going forward. Again, I mentioned this earlier, but, we've not seen too many, I guess, company-specific news items. So really, it's been the political news that's been a bit of a driver, along with, economic news coming from offshore. Now, from that perspective, nothing has changed. Everything is still all about the interest rates, the fight against inflation, when we can expect to see some rate cuts. You mentioned this earlier, but we've got the PCE data, which is coming out on Friday with reference to the US and the Federal Reserve. That's obviously the measure they use to track inflation. So, what investors are hoping for is a bit of an easing in inflation, and that would, I guess, firm up the expectation that we'll get a rate cut in September. And I imagine if we get one in the States in September, we'll follow not long after that. So these things are sort of, I guess, playing on investor minds right now. But in a nutshell, what we've seen is both locally and globally, at least for the time being, there's been a bit of choppiness. But, it does make sense given that there's a lot of moving parts that we need clarity on. So once that starts to settle down a bit, we can see the market sort of kick on one direction or the other.
The one thing that has been fascinating for me to see has been the moves in the financials. And this morning, we saw the markets reacting to ABSA flagging numbers that are not particularly great. We saw that share price fall at least around 8%. I'm wondering, in the lead up to, getting the full financial picture from the banks when they report their numbers, what information are you looking to learn about the health of the banking sector?
So it's quite interesting. I think, with reference to Standard Bank last week as well, we got some good profits from interest. And given just how elevated the rates are, I think that computes makes a lot of sense. But really what I'll probably be keeping an eye out for most will be those credit ratios, basically getting a bit of a gauge as to how the impairments have factored into the results. Now, needless to say, we'd like to see those numbers going down. You did mention ABSA, and basically those credit ratios did come within sort of the target range. It was probably, on the higher end, on the sort of top end of the range. But it seems to me that the banks are coming off quite high bases. They had a good end to the second half of last year. I think the market is expecting quite a bit from them. So maybe slight misses, or even at the end, even coming in sort of the top end of your range, has really somewhat panicked the market. It seems to me, just reading between the lines, that maybe we're expecting a little bit too much. And just with reference to those ABSA numbers, they came in line. They had provided guidance for this, but it does seem the market just, did overreact. Seems like we were expecting a bit too much. But yeah, we wait and see if that's the trend that we'll see with the rest of the banking numbers. But wouldn't surprise me if that is the case. We're a very over-exuberant bunch, the analysts.
Okay, so we've got a few days left until the first half of the year is wrapped up. And judging by how we've seen the performance of equity sort of play out, what questions are you asking yourself as we get closer, or rather kick off the second half of the year, especially as it relates to equities?
So look, from a local perspective, much has been made about the local consumer being under pressure. Nearly sort of every results that you would have gone through would have made mention of load shedding being a big cost. There've been issues with Transnet. Now, in addition to this, when you look at the general macroeconomic environment, it's a low growth environment. We've got high inflation, and relatively high interest rates, which has put us under quite a bit of pressure. Now, I've got to note that for the first half of the year, we haven't, at least officially speaking, seen any load shedding. So I'm hoping to see some of those cost pressures ease for local companies with reference to the second half of the year. But, with all the other things overhanging there, I wouldn't expect to turn around too quickly again. We're still in a low growth environment. But the hope is that, these things could start to settle in the new year. We haven't started to see rates come down just yet. So I don't think that that'll have too much of an impact, when we see those second half numbers. But I think where we need to be, very active, and I know the presidency has made this, a bit of a priority. Mr. President has included it in his Vulindlela project. But, we've got so much. From a mining perspective, we've got so much stock that, is ready to go, but for various reasons, we haven't been able to get it out through the ports, So to have some improvements in efficiencies there, some optimizations would be a massive boon, to the fiscus as a whole. So that's what I'm hoping to see. Whether or not that materializes is a different question.
As we wrap up, I'm sure there are many questions that your clients ask you every time you do those interactions. But one question that comes top of mind that clients are asking you.
Well, I get a lot of questions about Nvidia just in general, but recently I've been getting quite a bit, and I think that was off the back of them becoming the biggest company in the world when measured by market cap. And I think there was a bit of panic in the sense that investors were looking to take a bit of profit. Has my view on the company changed given how far they've ran? And basically I was sensing a little bit of panic, let's say, but ultimately my position really didn't change there. And where I would suggest taking a little bit of profit is if, your exposure was just way too high and probably you should be diversifying. But other than that, still love the company. But yeah, I would say that's probably the question I've been fielding maybe most often in the past couple of weeks.
All right, Mohammed, thank you so much for your time. That is Mohammed Wagley, who's a portfolio manager at Sasfin Wealth. And we are keeping an eye on the first quarter GDP numbers coming out of the US. We're expecting them to come out at 2:30 South African time.